Yo, today I'll be talking about FOMC tomorrow and come up with a thesis on why we could see a bounce. This is purely technical analysis, nothing fundamental or macro, and in my not so professional financial advice. I don't think either 50, 75, or 100 interest rate increase will matter too much since the market will always do what the market wants to do. It will find whatever reason to sell or to buy. It's either we're gonna break down or we can just reverse from here. So first off, I want to quickly go through some of the charts or the mega caps that do move the market. First, you have Apple, Microsoft, Tesla, Amazon, and Google. If you see the pattern, we have this initial sell-off followed by a double bounce into a rally. Google doesn't look the best since it's a liquid stock and it doesn't move as clean. But with Apple, you can see the initial sell-off into the first and the second bounce leading into the FOMC, and then we have this strong rally. Microsoft same thing, a sell-off into a double bounce into a rally. The reason I'm not showing Facebook and Netflix is because due to earnings, it just it just looks bad. There there's nothing to look at over there. But with the rest of the names, you can see we're all near an area of support. The stock I want to handpick to show why the market overall can see a bounce is Tesla, mainly because I already have prior technical analysis on it, and with pattern recognition, we did manage to spot out a potential top. I even marked it on the yellow circle, and you can see where we did reject. And I think one of my prior videos I did talk about this. So, like with Apple and other mega cap stocks, from this high, we see a sell off into two bounces. And from I think the last Tesla video we did from this high, we see this sell off into a double bounce here also. I want to point out we are around here in this second bounce. You can see in the right before FOMC on the same week, the last 2 days on the Monday and Tuesday are pretty much identical. Even the candle pattern is identical too. The Monday, Tuesday here is 14 to 15, and this week is 13 to 14. We are 1 day apart. And if we were to pull out a bars pattern from this low or this bullish bar to that candle over here, and if we move this over, you can see it's almost identical. It's very hard to say no unless this is just my confirmation bias. But you can see it is exactly 14 days and we're moving very similarly in this second bounce right before FOMC. And that's all I have to say for this video. in my not so professional financial advice based on what I see as in pattern recognition. I hope I'm right, but if not, then too bad. And remember, since this is FOMC, just act accordingly. If not, then it's better to just sit out. Again, I'll try to make more videos once I do see cleaner setups. After FOMC, once the decision is made on the interest rates, we should see clear movements whether we are bearish or bullish.